Hello, this is Peter, and we're going to talk about why the biggest gains in the stock market come from companies you've never heard of and how you can become wealthy from it. There's a big problem with the stock market for most investors. The returns are just too small to ever make you wealthy. Okay, forget about wealthy. How about just financially independent? Even at a fairly modest lifestyle, your average 401k is going to have a hard time getting you there. There's an army of investment advisors out there touting the returns of the stock market over the past several decades, showing how small, regular investments made from the time a person is young will grow to a respectable retirement over time. And that's true, kind of. The truth about the stock market based on hard data might surprise you. The Standard Statistics Company merged with Poor Publishing in 1941, forming Standard & Poor's. In 1957, Standard & Poor's launched the S&P 500 index. It was the first stock market index calculated by a computer. The S&P 500 represents the biggest, best-known companies in the stock market, the kind most financial advisors want you to put your money in. So how is it done? In spite of all the hype, it's only increased 7.3% per year on average since 1957, or 10.5% per year with dividends reinvested. And that includes the recent phenomenal gains of 21.95% through the first 3 quarters of 2021, the 18.4% return of 2020, and the whopping 31.49% increase from 2019. By the way, history shows that the returns following outsized years tend to be low to negative. So the data says that disappointing performance in the S&P 500 could begin soon. That's an immediate problem, but it's not the real problem. The real problem is most people didn't start investing long enough ago to build up a big enough account to retire on. The truth is most people need to get huge returns going forward if they're ever going to be financially independent. And the big stocks of the S&P 500 will never be able to get them there in the time they have left. For one simple reason. It's hard for a large company to double or triple its stock price. And surprisingly, that's even true for the best of the big caps. Take a company everyone widely acknowledges as a fast-growing household name that dominates its markets. The poster child for that kind of world dominator is Amazon. From the 3 years beginning in 2018 to the beginning of 2021, Amazon ran higher by an incredible 154%, which included a phenomenal price jump of 106% in just 3 months in early 2020. That's impressive. And anyone would be proud to have held the stock during that period of time, giving you bragging rights to your family and friends forever. But is it enough? And can you do better? The truth is, for most of us, if you want to become financially independent with any degree of comfort, you're going to need to do better. And that can be a tall order in the regular stock world. If you're heavily diversified with the S&P 500, the best you can hope for is 10 to 11% per year over time. That's what the hard data tells us. And the same data says the next few years might be massively underperforming even those modest figures. But even picking the very best of the big caps with a stock as phenomenal as Amazon, you're still looking at maybe a double or a triple. That's the best you're ever going to get on a large, well-known company. But smaller companies double or triple their stock prices all the time. In fact, some can go up 10 times in as little as 3 years. That's a whopping 1,000%. Here's a fact the financial advisors never tell you. The small cap index is represented by the Russell 2000 and has outperformed the S&P 500 over time, and sometimes is outperformed by extremes. For example, in the period between 1979 and 1983, the Russell 2000 outperformed the S&P 500 by an astounding 80%. During a period of extreme economic turbulence in the stock market, like the kind we might be coming into. Investors judged that smaller companies navigated the environment more nimbly than larger ones and invested accordingly. But then again, from 1990 to 1994, during the 1990 to 91 recession and its immediate aftermath, small caps again outperformed the S&P 500 by nearly 50%. And then more recently, from 1999 to 2014, a new era of turbulence began with the tech wreck, 9/11, Afghanistan and Iraq wars, the subprime bubble, economic meltdown, and quantitative easing. During these volatile years, small caps outperformed large caps once again, with the Russell 2000 thrashing the S&P 500 by 114%. Who would have ever thought that investing in small caps could be an effective safety net in an economic meltdown? But history shows they are, and they probably will be again the next time the S&P 500 crashes. But it gets even better for extreme small caps, the kind known as microcaps, especially when they're growing fast with a real technological edge. For example, I recommended quantum computing, QUBT, for just $1 per share back in 2018. And at one point in December of 2020, it spiked over $25 before pulling back. That's 25 times on your money. Try doing that with a big cap. Since then, QUBT has pulled back substantially, but it's liable to go a lot higher because they are positioned to become the Microsoft of the quantum world, as their software works on anybody's hardware. I also recommended No Labs, KNWN, to my subscribers in 2018 at just 25 cents. And now it's going for over 10 times that. But that's just the beginning, because once the No Labs story plays out, I'm anticipating getting 100 times on our investment. That's just not going to happen if you're buying Amazon at several $1,000s per share. Then at the beginning of 2019, I recommended a lithium battery recycling company, American Battery Metals, ABML, for 20 cents. Then in February of 2020, the stock got down to just 3 cents for reasons my research said would be temporary. And I really pounded the table on the stock. So let's say our cost average is out to about 13 cents per share. You can buy a lot of shares at 13 cents, and a bunch of my subscribers did. Less than a year after it bottomed in February of 2020 at 3 cents, the stock launched in December of 2020, rocketing over $4.50 per share, a mind-bending 3,460% increase from that 13-cent average price. Of course, after a run like that, these little stocks often crash back to earth, but even now it's trading over 10 times what we paid for it, and I haven't sold a share because my research indicates the best is yet to come. With a stock price of just $13, this stock will become a 100 bagger. If it was just me making this kind of money, it wouldn't mean much to you. But it's not. A ton of happy subscribers have come along for the ride. Current subscriber Billy Mitchell says we're heading to Hawaii next week for 7 days. To some degree, compliments of you. Could I have attended a trip like this before? Yes. But now I can afford it carefree without worry. And that's a big difference. Subscriber Robert Yalden wrote to say ABML brought in about $30,000 for the month of December, which contributed to a very Merry Christmas. Fear not. I'm still in ABML long term, and I thank your entire staff. Cheers. And this one in particular really warms my heart. Hi, Peter. All I can say is thank God and thank you for sharing your knowledge and expertise. You were literally the answer to my prayers. The trust account I managed was being rapidly depleted due to the 24/7 care that my mom needs. But now, with your help, I'm seeing enough cash flow to cover 90% of that monthly bill. As for ABML, I picked up 10,000 shares for 3 cents. You can imagine my excitement that my wife and I are debt-free from just one trade. God bless you, and I hope to meet you one day to thank you in person. Russ. If you want to know why I write an investment letter instead of just doing this on my own, those are some of the reasons. Turning a profit's always nice, but getting emails like that keeps me waking up every morning excited and ready to find the next one. Now, just to be clear, there are risks with these little companies. In the beginning, I recommended some that went from our initial investment all the way down to zero, and we lost money. So it's important not to overinvest in any one opportunity. But I've learned a lot since then. I've discovered some things that have really increased our odds. But even the venture capitalists say that 1 out of 10 of these opportunities works out. And the truth is, if one play really catches fire, that's all you're going to need. But the good news is we've done a lot better than that for some very important reasons. And I want to share that hard-won knowledge with you. I'm creating a Microcap manifesto right now that I'm going to share with you as a subscriber to this service. It's a complete investor course that provides everything you need to create extreme profits in the high potential world of microcaps, and it's included free with your subscription. Plus, in addition to my own proprietary search filters, I subscribe to thousands of dollars worth of research every month, so you don't have to. Fortunately, you're going to get to leverage all that information plus my own hard-won experience for a lot less. To see how much less, go ahead and click the button below. If you want a real chance of getting ahead, this is the kind of deal you'd be crazy to pass up, especially considering some of our subscribers have literally made millions using my recommendations. And unlike some nervous Nelly trading service, with this strategy, you simply buy and sit back and wait. No trading, no jumping in and out of positions or constant watching your computer screen. I'll let you know when to get in and at what price, and time and good management does the rest. And when the bounty is ready to harvest, I'll tell you when to take profits. And the irony of it being so easy is that you're liable to make far more money than any fast-paced trader out there. There's just no substitute for buying a stock for pennies and watching it turn into dollars. Now, because the really good deals just don't come along that often, I might only recommend 2 or 3 new plays per year, but based on our previous experience, that's all you're going to need. Plus, you'll have full access to our existing plays, some of which still have a long ways to run. So go ahead and click the button below, and I'll look forward to building some life-changing wealth together.